whereas regular life insurance does not. The final thing I want to talk about from a tax reduction point of view is tax planning and looking ahead and looking at inheritance tax possibly for your dependents. So in Ireland, you may or may not suffer inheritance or gift tax on receiving money from somebody else, depending on the relationship and depending on the amount that you get. So we have 3 capital acquisitions tax-free thresholds in Ireland. For parents who are gifting money to their children, or their children is inheriting money from them, they can receive up to 335,000 over their lives. Now, that might seem like a big amount of money, but if you're a couple that owns a property in Dublin, which I shockingly found out earlier that the average house price is now more than €500,000, and you only have 1 child, that's going to be quite a hefty tax bill for them inheriting that property on your debt. For people that are in group 2, which includes things like, grandchildren, it's reduced at 32,500, and then any other person, it's €16,250. But there is another very powerful annual exemption against capital acquisitions tax that people have at their disposal, called the small gifts exemption. And it can be really powerful as a way to transfer wealth to your family members without eating into their capital acquisitions tax thresholds. Just to give an example of that, okay, let's take Louise here, who's inheriting 450,000 in an account from her mother on her debt. The funds were from the sale of a property 10 years before her debt. As Louise falls into the Group A threshold of 335,000 and she's inheriting 450,000, the balance of 115,000 is actually subject to capital acquisitions tax at 33%, which means that Louise has to pay nearly €38,000 in tax from receiving this amount of money from her mother on her debt. Now, there is something that her mother could have done to avoid this scenario, and it's something people can do as well for their own kids. So what if instead Louise's mother started to gradually transfer the money to Louise and her family 10 years before her debt, after she sold the property, using the small gift exemption? She could have gave €3,000 to Louise each year by 10 years, which is €30,000 passed on tax-free. She could have gave 3,000 to Louise's husband each year. That's another 30,000 tax-free. And assuming Louise had 2 kids, she could have gave 3,000 to each of the kids each year, which is €60,000, another €16,000 passed on to that family tax-free. That could have been put into accounts for their education, something we would usually, structure for grandparents for their grandkids. So in this case, Louise's mother has actually passed €120,000 tax-free onto the family over a 10-year period, which would have left just €330,000 in the account inherited on debt, and no tax to be paid for Louise in this case, just with some careful planning, and she would have been left with €5,000 of the tax-free threshold unused. So it is important to just plan ahead and making sure that you I suppose your eyes are open to things like this.